Hey team, welcome to my channel. Bit more or a little bit less of a trading session to talk about today. This one I thought pretty important to go over some of the ideas on the stages, right? Because it's really when I first started trading prop firms, it was back at the start of this year, and it took me a bit of time to kind of get my head into understanding what they were, how they operate, how to change your mentality in terms of trading to become successful. Right now I'm online to get 12k this month. I don't think I've earned 12k in any job ever, and so that gives and that's just scratching the surface, right? You look at some of these YouTubers, 50k's, 80k's, it's crazy. Now I've only got 5 accounts, right? And so I want to talk a little bit about my journey, a little bit about how I kind of approached it. A lot of the false dawns where I thought, okay, got the hang of this, and I got smacked back down. And then if you stay around and stick around to the end, I'm going to show you exactly how I trade and how I think, for me at least anyway, it's the appropriate way to trade these prop firm challenges. And so what are the stages, right? The stages, it's going to be more of a conversation. I'm probably going to go into the charts in a short while, but it's going to be more conversational. So if that's not your kind of thing, switch off. But basically, the stages are easily, right, there's an evaluation. We have to have an evaluation. When we pass that evaluation, we get what's called the live account. There's still simulated funds, but usually it's a PA if it's Apex. And so one of the things that I noted early on is I would pass evaluations, but as soon as I got a PA, I'd fail it. And this went on a long time, just failing PA after PA, managing to get a payout. I think the first payout that I ever received was 2k, and I was absolutely over the moon. And then the day I got approved, I blew that account, literally the day. And so there's something not right in the way I'm trading if I'm doing that right. I don't know if it's... Well, I do know what it is now, and I'll explain it. But at the time, I didn't know if it was because it was just, I was so happy to get the payout that I didn't really care anymore, and I was happy to just trade the way I wanted to trade, or if it was more... if there was something else in the mix. And didn't pass for another... or passed a few evals and kind of messed around and whatever else. And if you're at that stage, right, just know that when you're trying to take evaluations, they are a means to an end. They are not the thing that's going to get you payouts. They are a means to an end. So pass it whichever way you can. Full port, just get them out the way. They're not really, they're just there to kind of add an additional layer, right? For the majority of people who will fail, it's money going into the coffers of the prop firm. And so your job is to just pass them. More often than not, I full port on a news day, sometimes even at the open, one way or the other, and I'll just pass them. And then, as I say, once you join the PA gang and you're getting some PAs, you've got to trade slightly differently. You've got to remember, and I've spoke about this on a few of my videos, but you've got to remember that you've got to just take profits early, take losses even earlier. Don't dwell on it. Get yourself past the payout thresholds. If you can do that and you get yourself past that payout threshold, you're in a really good spot, because then you can relax a little bit, right? And the transition going from evaluation to PA and then from PA to past the thresholds, there's a fuzzy kind of middle bit where in your head you get really nervous when you're getting close to that kind of point, right? And so you've just got to get past that. And I think once you get past that hurdle, the first thing I do, once I'm past my profit threshold, my trading becomes very, very safe, right? In the sense that as soon as I go into any kind of profit, I can quite happily leave my stop loss at break even or just past break even, because if price really moves away from my entry, fantastic. But then if price starts coming back up to where I entered, well, in the trailing drawdown, that's going to effectively negatively impact me, right? But when you pass that threshold, it doesn't really matter. And so a lot of these trades you can kind of let run out and play in the normal way. And as the account starts to grow and builds up, and I'll show you this in a while, you get to the point where you can then successfully build your consistency. So the consistency of 30% with Apex, the bigger I build my account, the more consistency I've got. And so that starts to go away a bit. And so that part is just a process. There's the trading element of it, you know, understanding how you trade. I don't know how you trade specifically, but the way I trade is I'm a scalper, and I found I'm a bloody good scalper at that, right? Because I do something quite unique in the sense that I will, before I place a trade of a scalp, I'll place a stop order first, and then I'll place my scalp buy or sell relatively close to where I've already placed that stop. I don't do it as a bracket order because I'm copy trading 5 accounts, right? And I can't copy trade on a Mac. So I have to use the copy function within Tradeovate. So by putting that stop order first, because I'm always looking to fade the market, right? I never go with the flow. I'm looking to fade the market. So when the market comes into me, I've already got my stop of where I think price would go beyond that. I'm happy to get out. And then I'll hit a buy or sell just prior to when it hits that. And so I'm going to, you know, if you stay around, I'm going to show you exactly what that looks like. But that's the fundamental part. Then you move on to the stage where you are okay, you're passing evaluations with good regularity, you are getting your PAs at least to a stage where you can build them, and then maybe you're taking a payout. But then you get to the stage where you're doing that consistently, right? Now, my first evaluation I took in January of 2024, we're now in July of 2024, so that's 7 months, right? So 7 months it's taken me to get to what I would classify as a substantial payout. 12k is nothing to be sniffed at, right? You know, that is a lot of money to me, right? So, but I haven't just got to 12k. I've done that with a decent enough backup, right? Let's show you. So you can see here in my, ignore these were stupid full ports this morning. At the open, I had 3 going one way and 2 or 3 going the other way, and they both just wish-washed. So these are just evaluations. I just got it wrong. But if you look at the PAs, you can see here. So on the 250k accounts, this one's now up to 261k. So that's 11k in profit, right? That other one's over 11k in profit. And then the 50Ks, they're at 56, so that's 6k in profit. Now remember, when you take a payout on a 50k, you're taking $2,000 out. And when you take profit on a 250k, you're taking $3,000 per account. So just as a quick math, if I take $3,000 from on my 260k, which has got 11k in profit, that 11 goes down to 8, so that's theoretically still 8k in profit. 8, 9, 11, yeah. That's still 8k in profit. And as long as I'm over 6.5k, then I can take profit again. So realistically, I've built at least 2 payouts in that account. And almost, well, the same on the 50Ks, right? So that's 56k there. So 2k, but take that down to 54k. Or just over 54k, and I've still got 2 or 3 trading days left, by the way. The point I'm trying to make is I've built up such a buffer now where I'm confident of repeatability, meaning that because and this is where it all boils down to. This is the point I'm trying to get across more than anything else. It's not so much about the system, although the system is important, but it's absolutely crucial that you understand the risk management and don't get yourself into one of these things where you give the market any chance to pull your pants down. That is the key. So every single time you take a trade, know where your stop is always, and what that loosely looks like in terms of a loss. Like mine's about $200. I won't really want to lose more than $200 on a trade, but equally I'm making $200, $300, $400, $500, $600 on a trade as well. And so that's the key. Just understand where your stops are. And so, for example, the way I will place a trade, let's say here now, where these kind of candles are moving. Let's say all of a sudden we have this big candle that starts to come down here, and I'm anticipating that price is going to come, I don't know, maybe into this bottom area here. The first thing I'm going to do is I'm going to go sell stop, and I'm going to put that sell stop there, right? So that's my protected stop. Then what I'm going to do is, so if price starts moving its way down here, right? Now I'm doing this probably relatively close to where the candles are, but let's say the candles have just gone past this second standard deviation here. As it's coming closer and closer to my stop order, I've got my hands hovering over that buy at bid, right? So I'm beating the spread. As soon as it comes into an area that's relatively close, maybe 5 points or so outside of there, I'm hitting bid, and then I'm instantly coming over here to drag this into profit. The moment it goes into profit, I'm releasing, and then I'm hoping, right, that we get a substantial move up. And then as price is moving up, I'm just going on and going on. Now I will probably get 80% of them right and 20% of them wrong, and the 20% that go wrong is a $200, maybe a $300 loss, whilst the opposite way can sometimes run right. If I catch it right, it'll run right the way up, and that's how I trade, right? The question isn't always, well, why there? It has to be some sort of an area of interest, right? But that will always safeguard me from getting into a trade without putting me protection on first. And so the same would be the case for the above, right? If it was above, I'd have a buy stop, and here I would put a sell limit. If I didn't want to have a sell limit, I would just do sell at ask, right? When price is coming up relative to the zone. Like, say for example, here's a classic example, right? We have a nice fair value gap here. Right now, maybe I expect price to come and hit this tick here, right? So to close the candle at this tick. So maybe I would say, okay, well, I'm gonna have my sell limit there. Sorry, buy stop here. And then as soon as price starts moving up, I'm hovering over the sell ask, hit the sell at ask. Hopefully price doesn't hit, if price comes up to here, comes up to maybe the VWAP and then reverses down, I'm in for a nice move, right? And that's just, I copy trade that across each account, and you can see it's done me really well, right? You can see today was a lovely day, around $1,500 per account, just trading this way, right? And so to kind of circle back around on the point of this conversation is, it's understanding the stage where you're at, right? Are you at the stage where you're struggling to pass an evaluation? If you're at that stage, don't worry, you're new, you're getting relatively new into the game. Don't focus too much on taking too much time. Honestly, I've been trading a long time, and for me, I don't have the patience to do an evaluation, especially the 250Ks. I'm either going to pass it in one move or I'm going to fail it, and I'm happy with that. If you're at the stage where you're passing evaluations and then you're getting your PAs and you're struggling with PAs, take the profit early, right? I don't know what type of trader you are. Maybe you hold trades longer. Maybe you're happy with the $1,000 risk. Maybe you want, but I would say try not to focus too much on that. Try to focus on smaller sniper trades, right? And maybe looking at the way I trade in terms of being able to get in quick, get moves in. You may not have that time, right? That's another factor. That sometimes I can have the time where I can trade that system. If you can't, I understand that. If you're at the stage where you are passing evaluations and you are actively gaining on your PAs, well, then understand that once you have hit your profit threshold, you change your mindset into how you trade. Always think of capital preservation. Try to build the account. Try not to get nervous once you're getting past that. I understand why, but it's no different once you get to that level where you are thinking too much about, well, I'm close to payout and I don't want to screw it up and blah blah blah. Try to forget that. That's never going to help you, right? We as traders need as little undue focus as possible. We need to just focus on the charts and focus on the things that matter, not focusing on things that you can't affect, right? So just understand that. So that's really it. There's nothing special. I just wanted to kind of be honest, open, just about where things are. It's taken me 7 months to get to a point where I am probably now confident that I can repeat this process and build on my accounts, right? So I've got 5 accounts now. Once I take profits, I'll probably use a buffer account to start building my evaluations. and then converting them to PAs, and hopefully over time build up to 10 accounts, maybe 15, maybe 20, start adding some other prop firms in the mix. And that's really how you do it, right? And so let me know what you think. What stage are you at? I'd like to know. Head over, join our Discord server. You know, the link is in the description. Love to hear from you. Okay.